getting stuck in chop zone. Okay, how do you know when something is chop versus not? Okay, and so I right now, if we go back to, we just previously marked our key levels, and you're seeing that right now, as of right now, price action is having a hard time getting above this 56.75 level that we marked on our previous video. And you can see here that 580 is going to be could be a big resistance wall as we're approaching it. So this could be a good zone to short back to max pain, or maybe even go for max pain, take some profit, and then maybe go aim for 56.25 if it fails to bounce from here. But if the other case goes is like, hey, we're above entrance level, what does that mean for you as a trader? Well, when Gextron shows you these levels, right? It's also going to tell you, hey, don't trade in between these levels because there could be a lot of unpredictability. It could be low volume, it could be choppy, it could be slow. And if you know anything about trading options, this could be pretty dangerous, especially as you're getting closer to expiration, right? You have theta kicking in. You don't want to get caught up with that. So it's best to just avoid this and wait for clear directions. Also, let's go back to Gextron. If you take a look at it, the reason why we call this especially a drunken sailor area in this exact environment is because you can see here, this is an area of interest, just like we spoke about it in the last video. It's a small one, and this is an area of interest. It's a small one. This is an area of interest. It's a small one, and this is an area of interest. This is a small one. But the problem with this is that it could ping pong. Okay, the thing with these areas of interest, these key levels that we're looking that Gextron is showing you, is that they can act as support and resistance. They don't have to be just like max pain doesn't have to be just support. It can be support, fall the way down, and then when it meets again, when it tries to retest max pain level, it can act then as a resistance. So it can flip. It's what they call an SNR flip. So it can flip as from support to resistance or from resistance to support, right? And so, in the case of this, you don't want to get caught up getting ping pong from from 5685 all the way to 5700, back to 5685, then maybe back to 5705. Like it's just too much. This is what we call drunken sailor area. Avoid this. Wait for a clean transition. Preferably mark the levels and just wait until it goes either below entrance to go short, or P-trans to have a bullish sentiment, a bullish thesis. Okay, so avoid that. The next thing I want to show you here is in this chart. Let me see if we can find one here. And this is all happening in real time. Okay, is let's see if we can find today's date, because today's date there's still 31 points left in the day. Okay, sometimes in the market, and it's not showing as of right now because there's so much volume, but sometimes in the market you're going to see these low volume histogram bars. Let's say 56.45 right here, this bar right here. Sometimes this is going to be flat. It almost looks like there's nothing there. This says negative 43.73 million. It says it right here. The total net exposure for the strike level. Sometimes this is going to be like zero or almost zero. Now this could happen for a couple reasons. This could be because either both calls and puts are equally matched, so they kind of they equal out to zero, or there's just not enough volume or open interest in those contracts themselves. So it could be for one or two, either one of those reasons. And so when you find a situation like that, let's say that 56.45 is one of those dead zones. We call them dead zones when there's not enough gamma momentum and it's pretty much flat zero. Let's say that we're going to draw a line here because these are really important. You don't want to get caught up with that. 56. We're just going to say it's 56.45 for the sake of this example, okay? Let me see where this line is at. 56.45. Okay. And what I'm going to do here is I like to style these dead zone areas with a dashed line. That lets me know that visually, when price is coming close to this, hey, Ruben, you might want to just watch out, okay? We could possibly do this. As you can see, it's rejecting. Take a short position, aim for 56.50 area. But if it goes through, it can pull back here, and it's like almost momentum dive to the downside. It doesn't mean it can't continue further down, but you may want to be cautious about these dead zone areas, okay? Because it could potentially bounce back to max pain and then go back down. Or it could bounce from here, make this actual support, and then go back up. Okay, so just be wary about these areas right there, and also so avoid trading these spots. Okay, you don't want to trade these areas where there's no momentum, where gamma exposure dies off, and you don't want to trade areas where P trans, anything between N trans and P trans level, because that could be chaotic and a painful death for your contract. Okay, and that's how you trade. That's how you avoid chop zone areas and also dead zone areas. There's one ticker I want to show you, which is not the SPX. This is just SPY. Okay, so we're gonna go to SPY here, and one thing that you can see here, okay, is that we have this total net gamma. Gextron tells you how much total gamma exposure there is in the market at the moment. Okay, and as of right now, in today's market, we are at negative 13, pretty much almost negative 14 billion in total net gamma exposure, which makes us put dominated in the market. Hence, why there's so much drawdown, so much blood in the streets as of right now in the market. So, and actually, just to go back to the dead zone areas, these are perfect examples. 562.5. These point 0.5 areas, these are like areas that these are strikes that nobody really buys. Nobody's buying the point fives on SPY. They're going to be buying whole numbers like 56, 563, 564, 560, right? So these are good areas where like price can go down, 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 oop, and then bounce back up, because it's like it could be a short term bounce, but that's where like momentum can kind of die off, right? So back to what I was saying about this number right here. Okay, how do I know? And this is just from our studies looking at trading SPY. When SPY is between -3, okay, only -3 and 3 billion positive, anywhere in between that range is almost like sideways. It could be choppy, it could be slow. There's really no directional bias on the market for the S&P 500 ETF. Okay, so pretty much the overall market, it could be kind of flat. Once it starts going below -3 billion and lower, it's directionally biased to the downside. And once it starts going up 3 billion and above, it's pretty much directionally biased to the upside. You'll see that often, time and time again, because there's a lot of bullish momentum, either once it's 3 billion and above, or pretty bearish once it's negative 3 billion and below. Okay, so this is another good way to just figure out, is the market or is SPY, uh, does it have enough gamma exposure directional bias? And you just check. You do that by just going to the SPY ticker, and when you use Gextron, you can look at any ticker. You could just start typing SPY, and it starts typing it out. Okay. Or if you're using Windows or Mac, you could do Control K or Command K to do a hotkey, and or you can also just hover to the left hand side. It says search. Okay, it's that simple. So you search up SPY, and then you can see here. Okay, is there enough gamma exposure that is directionally biased to a specific side? In the case of today, there is, which makes it very, very nice to be shorting all the pops with the SPY at the moment. And you can see here that the SPX is reflecting that. Okay, so that's it. In the next video, I want to discuss about how to know when the market is going to become very volatile. So if you're a swing trader, this is going to be really important, because not every trade, not every environment is meant for swing trading, and vice versa. If you're a day trader or a scalper, then you're going to find out when it's the best time to become a day trader and a scalp trader, and when it's not a good time to be a day trader and a scalp trader. So I'll talk about that in the next video. Peace.